The biggest market stories over the course of 2014 have included the slide of oil, the rise of the US dollar and equities, the ruble's freefall, and Germany losing its grip on holding the safety of the European economy. But you don't want to hear it from us. So, in collaboration with Investing.com, we're bringing you a special two-part programme with insight from some of the top contributors to the Investing website. So, first up, Steve Hansen has been left surprised by the large drop in oil prices this year, pointing out the decline will have knock-on effects, both good and bad, but that one cannot understand the timing or intensity of the effects. Hansen says life has been very different as an investor since the Great Recession, but that in any event, his belief is the market is overvalued relative to the business cycle, and that the markets will have a ho-hum year as the markets adjust to the business cycle. He says it seems a currency war has been triggered by Japan, and if the dollar continues to strengthen, it will have a mixture of positive and negative dynamics on the USA business cycle. A strengthening dollar reduces business profits. The question, he says, is how much will the dollar strengthen? Next up, according to Lien, when it comes to currencies, there's nothing more important than the direction of monetary policy. Lien says in the second half of 2014, the dollar appreciated 13% against the Japanese yen and 8% against the euro, and she expects more to come. Explaining, in 2015, the Fed will raise interest rates as the ECB launches its own quantitative easing program, and the Bank of Japan considers more loosening measures. With stocks expected to provide less return, the dollar will become an attractive bid to yield-hungry investors, and their demand for the greenback should drive the euro-dollar below 120 and dollar-yen to 125. However, Gary Savage's forecast contrasts Lien's, as he says, "I suspect that the stimulus policies in Europe and Japan will turn their economies around, at least for a while, and that will cause the euro and the yen to strengthen next year, causing the dollar to drop." And our third opinion regards three trends. David Tablish says, as 2014 draws to a volatile close, I expect three major trends to continue well into 2015, with the US dollar being the most important area to keep a close eye on. The precious metals complex is another area Tablish is keeping a close eye on, saying it had a beautiful 10-year bull market that ended in September of 2011. Gold has been in a bear market, making lower lows and lower highs. The third area he is keeping a close eye on is the US stock market, which has been in a bull market since 2009 and is still running strong. He added, the semiconductor, healthcare and biotech sectors are areas to watch for leadership as the bull market charges forward, which should make 2015 another great year for investors. And last up, Investing.com contributor Strawberry Blonde says markets have favoured the defensive sectors, plus financials and technology, while housing has taken a back seat this year, and that a rotation to a more offensive approach may start to be seen from around February. Adding, if we start to see more major selling in oil for any sustained period of time, then I believe we'll likely see a major pullback occur in the equity markets, particularly if the Fed hints at raising interest rates in mid-2015 or thereabouts. However, Strawberry Blonde says, however, I also believe that any further advance in US equities beyond their current levels is dependent on further sustained strengthening of Japan's Nikkei index, Europe, Brazil, and China. Well, that's all for this first instalment of the 2015 Outlook in collaboration with Investing.com. Thank you for watching, and tune in next week when we'll have the next edition. Goodbye for now.